not the right music for today. There's not the epic NFP. That's one of the my favorite music producers. They're a little band called 2 Steps From Hell. They make a lot of the trailer music, but yeah, that one was a little intense. Didn't expect it to go across like that. Yeah, I mean, we had a little bit of volatility post the NFP on Friday. The rumors about the North Korea missile test didn't help. You've seen a rebound though in the stock market that's been able to stabilize and recover. Some pretty good news regarding softening of Brexit for the pound. You know, well, a bit of value down here anyway. If you're long on the pound, if you think that the Bank of England rate hikes or just the US dollar rally is a little overdone. Nothing really changed too much, but it's definitely enjoying some nice relief rally here. But the euro, in terms of the anti-independence protests, were huge over the weekend. So that puts Catalan to the side. And what's the next big thing in the market? It's the October ECB meeting. So the main reason that we're buying euro yen on Friday is to get long euro somehow. I suspected the dollar yen would do well, but now we've got a concern about this North Korean missile test, and tomorrow is the big day when they might do the test. So a little bit dangerous to be long euro yen or dollar yen at the moment, or any yen cross. But if nothing comes tomorrow, then yeah, you should see a relief rally, given that story on Friday was pretty real. We got wage inflation for the first time, and that's huge in the market, right? That's huge for the US dollar, that's huge for yields in the US, it's huge for yields globally, with the exception of Japan, which has still quite suppressed yields and will for some time. So euro and the US dollar in the G3 can definitely start to push higher again, and that would when euro yen and dollar yen move together, that's when you get those big moves, and pound yen, if it wants to join, that's when you get those big moves against the yen, and that could be on the cards. And it makes sense given that the risk appetite is so so entrenchedly on, and it would require some pretty aggressive North Korea to dislodge that. I suspect that North Korea could just be another buy the dip if it's just a missile. Perhaps the US will do something. Trump's been talking it up, hasn't he? So there is more risk than usual, but it's to me, it's another just buy the dip probably if they do something tomorrow. And if they don't, then just pretty aggressive up. So yeah, looking at the euro here, it's stabilized under 1.17. Nothing really in the way for it to start rallying again. Just need the right price action, a couple of highs to be broken, and the people who have been on this rally from way back, traders can comfortably get back into this trade, I suspect. And it's my favorite way. Euro USD is probably my favorite trade this month, and something I'll be looking to add to and hold for the 120 at least retest, depending on how Draghi orchestrates his ECB meeting. And so yeah, so we're still holding the dollar yen after the rally on Friday. We got into some euro this morning and got into some euro yen also on Friday. Euro yen's fine, but yeah, dollar yen's still under. This is actually technically pretty bad. That's not what you want to see on a 4-hour chart. So yeah, it's got some work to do here to regain the market confidence. It was struggling to get past this level for so long as well. This is not looking great in terms of that. Just in the short term, probably going to close this just because of that risk tomorrow. I don't want to be holding dollar yen into tomorrow, because I'll be sleeping, but they usually do it quite early, 5 or 6 a.m. Sydney time, 8 a.m. That's the sort of timing that it comes through, and I don't want to be away from the computer and trying to manage that. But I'm not totally convinced it's going to happen, and that's why I'll keep the euro yen. But yeah, I'm pretty happy to be long euro and euro yen here. The pound, it's still rallying faster than the euro, so I've got a little bit of euro pound selling again. When you do get euro pound selling and you get euro on the same foot, that's generally the things you're looking for, right? You're looking for that. If you're going to buy the pound, you want a nice euro pound selling, and you also want nice pound yen buying. You're getting a bit of both, and that can get you a little bit more comfortable with your pound trades. Exactly how high we're going to go is up for grabs, but this, it's got a fair bit of room, doesn't it? All the way back up towards 132.80, 133 is on the cards without really even changing the whole dynamic. It's quite a sensible move. Aussie dollar though is struggling to get away from this 77.50 level, and it keeps on mucking around down here. That gets more dangerous because there is huge stops and huge sentiment change if it can break below it. So what happens in the next day or two is pretty important for the Aussie. There isn't a huge smoking gun story behind it, but the Kiwis are under pressure with the election still in gridlock, and the Kingmaker not really picking a side yet. It's supposed to pick a side by the end of this week, but that uncertainty is still not helping. And the final tally showed a much closer vote than the original polling night. So there is a bit of negativity towards the Kiwi that's remaining, and it's hard to buy this until we get some clarity. At that point, perhaps, especially if the euro and the pound's on the rally and the US dollar's weak, then the Kiwi will probably enjoy a nice recovery rally too. If it's if the Conservative Party gets in, if it's the Labour Party, then you got more downside and more danger and less potential rebound there. You might go down a bit further, towards the 69-68 region before getting a relief rally if Labour was to get in. And you never know, if the Aussie's broken to below 77.50 and the whole market is turned on the commodity currencies, then you will have a hard time buying the Kiwi. Kiwi overshoots regularly, and it's pretty dangerous currency to try and pick the bottom in. If you get nice price action though, then you can hop on midway through. Dollar CAD hasn't been really overextended though, so it's not really moving on to the CAD, which means that the CAD's the best performer out of the three commodity currencies. Gold enjoyed a nice little bounce today. Wasn't really much driving this either. I suppose there was a relief rally too, but we're keeping a close eye on gold, because gold sometimes little canary in the coal mine. Pretty strong buying in Asia when this risk was on. It's a bit weird. You don't need risk to be off, but it helps to make that rally sustainable. Yeah, where is VJ from? Which part of the world? I do miss him. I miss his trade charts. So in terms of the euro trade, let me put up that chart, the targets here. We're looking for a fairly substantial move higher. We'll start with 180.50, but it can go a lot higher than that. So it's not it's just sort of the first target. All we need is a couple of days rally here, and it's going to be very hard to stop in that next leg. ECB's been doing a good job of talking down the tapering multiple times. This one and this one was ECB, but so many times they can cry wolf, and we know that what they're concerned about is just the euro overshooting. I suspect past 125 would really be the pain barrier, not really 120. Let's put that in. If you're new and you don't know how to put a trade signal in, you go to the trade signal on the left, you pick your area on the buy side. Make sure you get stops in the TP. Very tight stop on this one, so it's good risk reward. And the TP one buying. Good Catalan news and price action. Post NFP. I'm looking forward to ECB dominating trader discussion. So yeah, you know I've been waiting to buy the euro. We bought it the first time, went down to 117.20. Got a nice little rally there up to 118. Came back down, looked pretty dangerous here, stabilized, looked very dangerous on Friday before the reversal. But every time you get a sharp reversal in the euro, you got to respect that. You know, a lot more support down here than you get in a weak currency, that's for sure. And so the outlook is by no means negative. It's just the US dollar strength is too strong, and that's you know, and you needed a technical pullback anyway. So the weak longs have been shook out a little, and now the rebuilding phase sort of begins. Ah, you are here, MMK, excellent. On the note of the Aussie and the weakness there, let's have a look at the Deutsche Bank trade of the week. Thought this was pretty interesting. Alright, breaks pricing for RBA remains too hawkish in our view, with 40 basis points next year. You know, most of the banks in Australia, I think they're going to raise 2 times. So that's where the 40 basis points comes from. And the risk on the US leg is for the Friday's inflation. Okay, so the wage inflation was really strong. On Friday we get the CPI numbers. The monthly CPI numbers are expected to be crazy. So from the US, they're looking for 0.6 month on month. Now that's real inflation if that comes through. I wonder what that's caused by. Maybe the previous year's month that's rolling off might have been negative. But regardless what it is, it's still a big number, and that sort of number gets people talking rate hikes and rate hikes next year. That's what the market doesn't talk about too much. How many rate hikes next year, or start to price in rate hikes next year. If you start to get that, that's where US dollar second leg of rally will come from. So Friday is the most important day this week. Maybe Draghi's speech, along with a couple of FOMC members. It's just a panel though. I doubt he's going to leak something there. So that's the main thing I'd be looking for. You've got a lot of FOMC speakers as well, but it's pretty well baked in what the FOMC is on about now. So it's to me the big thing is unless there's surprisingly dovish members of the FOMC, most are pretty coy and sticking to the party line that more rate hikes are needed, and probably will welcome, you know, anyone welcoming that inflation number, wage inflation numbers. Probably that's going to be seen as hawkish, right? So this is good for dollar yen if we can get past this North Korea issue, but the euro doesn't need that, right? You don't need euro can rally by itself too, especially if euro yen gets involved. US CPI. And the core retail sales, and the retail sales coming out at the same time. They're supposed to be bumper. The data's set really high. It's going to be really hard to clear that. You know, I wonder why the reasoning for that to be so strong. I'll find out the reasoning for the retail sales and the CPI to be, you know, why the expectations are so strong later in the week in one of my streams, and we'll find out what's going on. Yeah, stocks are just outrageous. DAX can fall a little bit if you do have a sharp euro rally. You actually want that sector. A sharp rally in the euro will help the DAX fall, but you know what's going to stop the Dow Jones is the bigger question, and the Dow Jones is sort of the boat that lifts all the ships, and it's just on a rocking path here, and it's just relentless. You know, this is I mean, this is extremely overbought. It's a lot of green candles in a row on the daily. Since Jesus, 1, 2, 3, 4, 5. Count that. Let's let it go back. 1, 2, 3, 4, 5, 6, 7, 8. I don't know if you can count that. Like, yeah, it could pull back any time. at least 400 pips, but that's just keeping in the uptrend, upward channel as well. Yeah, you need it to break down, right? You need, like, if you're looking for stocks to freak out here, you need something serious. And I suppose North Korea is the only thing I can see at the moment doing that. It's just normal profit taking can, but we haven't seen normal profit taking lead to a correction in such a long time. Over 400 days since we've had a 5% correction in the US stocks. That's just crazy stuff. So we may be waiting a little bit longer. But when it does happen, and that's going to be some interesting times to be a trader. We'll talk about how to play it, and what pairs do well, what pairs do badly. It's been a while since we've had sharp falls in dollar yen, and really sharp falls, and I suspect that euro will take up the mantle of a safe haven as well. And depending on the speed of the selling, you can get heavy selling coming through on Aussie yen and Aussie dollar, Kiwi yen and Kiwi dollar, and that could be interesting for the market. But yeah, let's wait until we get it. So basically, the Deutsche Bank thinks that we're going to see selling in the Aussie as the market reprices rate hikes next year. I don't think you'll get that, but you never know. It doesn't take much. All you have to do is break this key support, and the market will be off to the downside here, searching for support and searching for stops. Got a little bit long, a little bit aggressive. It's my favorite trade, the long Aussie at some points up here. Now that we're breaking down, this is where you really wanted to buy in a pullback, but until we get confirmation the US dollar is over, that it's really hard. It's really hard, and yeah, the Aussie sentiment towards the Aussie has been shifting pretty negative, so I suspect we'll probably break as well. But it's not the sort of trade I want to do, right? I'm not really a US dollar bull. But Euro Aussie long, Pound Aussie long, those trades are threatening to break higher against some key levels, and above these levels it's just a fair bit of space. So move to 155 is really it's not dramatic, it's nothing, and it can happen in a day or two of Euro outperformance in Aussie. Euro Aussie is actually a very good trade here. It's probably something that that our friend Andrew would do. I wonder what he's any people on that trade. Look at Mark, literally Mark Bennell's on that trade. All right, let's have a look at it. Fantastic. This trade's got heaps of fundamental backing and sentiment. This way of describing what the Euro Aussie is doing in technical terms is very similar to the fundamental terms, right? It's almost like another way of speaking about the market. But this is, what's interesting about this is that he doesn't need to know all the information that we've been talking about, right? He doesn't even know about the RBA. Right, it's built in a little bit. That disappointment, the RBA builds that slow disappointment, creates a view like this. That pullback in the euro and that resumption of the uptrend creates a slow pull up like this. Like this is what's his target? No target. Okay, but yeah, he looks like he's got targets around about 155. I suppose. I really should do an elite wave course. I see a lot of these charts, and I sort of don't get as much from them as I could if I had studied enough. But there's a lot of traders who use elite waves and swear by them. I mean, you can't just discount that, right? It's like Fibonacci's. So many times Fibonacci's work that you can't discount it. You have to, respect them a little. It's like 200-day moving average. On that point, where is the 200-day moving average on the Aussie? Is a question I want answered right now. I suspect we've broken it. still a little bit ways away. 76.94. Okay, so we might have a surprising little breakdown and then a little bit of support come through here. Aussie dollar can respect the 200-day very nicely. And so we'll see how it plays out, but there's something to keep an eye on. Just make sure I haven't missed any macro stories over the weekend. It is a holiday today in the US, that's correct. There's a holiday in a few other countries actually as well. You've got holidays in Canada and Japan today. Data's missed expectations for 5 months in a row until last month. This number is about as big as it gets at the moment. Yeah, it's true. So much focus on it, so much timing risk on it, right? I mean, a strong number, it cements the rate hike. It opens the door to further rate hikes. It's the missing link in the, the Fed raising 4 times next year. Say Nick, how's it going, mate? So, this CPI number could become sort of like a mini NFP day, right? This is, and considering there's nothing else this week, right? So that's, makes it even more important, and it comes out at the same time as retail sales. It's actually, it's worthy of staying up on your Friday night to watch if you're in Australia. So US Treasuries did hit highs. Let's have a look at them on Friday before falling. So that was only North Korea which slowed it down, but that was really starting to look ultra aggressive here. And that, that can really support a dollar-yen move past 114. Yeah, Trump's been all over it, right? All weekend, it's just been, aggression from Trump, not just against North Korea, but against other Republicans. And the whole "the calm before the storm and you'll find out" story was there. That was a little bit hilarious. I mean, this is the most powerful man in the world, and he's doing his diplomacy over Twitter and being quite vague. Yeah, so we talked about the Catalan crowds, which puts the fire out over there in Spain. So there's no real negative European story at the moment. I know you guys don't trade the lira, but Turkey and the US are having a little diplomatic spat right now. That's led to a huge move. It was 4% at some point. The lira. Very dangerous pair to trade. It's been in a really, really long downtrend, and as the Turkey and Germany have had issues, and it doesn't look like it's got support in sight. There's a new dictator-like leader there. I mean, not new, but he's turning into a sort of dictator, and he's being a very strong man over Turkey, and internationally. The diplomacy is very, very aggressive. So he's this is just talking about the Fed speak. It's going to be a lot more of that, but this is the number you need to keep an eye on. The chances of the rate hike in December, staying steady up here. This is the other spat I was talking about, Trump and Bob Corker. That's a Republican, right? So you know, he was laying into Corker, and then Corker responded on Twitter. It's a shame that the White House become an adult daycare center. And then after that, he said, you know, sort of along the lines of, but someone's missed their shift this morning. Because this is crazy stuff. That's like, you know, this is like the base, and you're going after your support. Like, he was part of the team. So the Tuesday, what we're worried about tomorrow in terms of the North Korea, what we're worried about tomorrow is it's their Communist Party centenary, I believe. Let's have a look. Get the right information for you. The Korean Workers' Party founding day. So maybe they've got another little present for the US, as North Korea likes to put it. So perhaps the underlying reason is that the speculation about May resigning is dying down. Seems to have got her senior ministers under control. So unless that flares back up, then you know, the pound's ability to rebound is what we have to watch next. You know, this is the most bullish we've seen the pound for a couple of weeks now. But the selling yet last week was one of the biggest in a couple of years. So don't underestimate how much the pound fell. And so, you know, a normal pullback is normal. It's just how far we get and what happens after that. If you get stabilization, that's a good sign for us to resume uptrend. If you get a sharp sell from 130 to 50, 130 to 80, those levels on the charts, those previous highs, then you might have to be a little bit more open to further downside in the pound. Obviously, if we can't get above 132 as well, that would be a concern. But at the moment, you have to give the benefit of the doubt that usually it's a much bigger rally than just 100 points when the pound rallies. And so we'll see how it plays out. If there's no North Korea issue tomorrow, pound yen, dollar yen can get involved, and that could create further fuel here. So quickly see that back up there by the end of tomorrow. But we will be here updating you at that same time. Alright guys, so I think you got the view here, what's happening. If you want me to look at particular pairs, please come through, send me a PM and we'll look at them. Other than that, the main takeaway from this update today is to keep on looking for the euro to show good price action. A little bit more rally here can definitely get the bulls excited again. There's no negative story out there to stop this. Only the US dollar can stop this. The ECB is a pretty powerful tailwind here for the euro. So, some more US dollar selling or just a little bit more momentum here in the euro can really start to self-propel. Once we start to rally, then people will stop looking at 120 and they'll start talking about the next leg higher in the rally, which is generally what happens after you have a correction and heading into a major monetary policy change in 2 weeks' time. We still haven't had any taper tantrums in the European yields as well. So last when US tried to get out of its QE, there was a huge move in, almost like a bubble popping in US bonds that led to sharp rallies in US yields that were a bit unstable. We haven't got that yet in the euro, but you get at some point the major downtrend, which has been going on for 3 years in German yields. So that's the way that's priced in bonds, is bonds have been in a major bubble for 3 years, supported by the central bank and negative rates. That has to be deflated, and it's very hard to do that in an organized fashion because traders know that it's never going back down there, right? So you have this view that it's only one way from here for the yields in Germany. That means it's only one way from here for the euro against most pairs. But we'll talk more about that if we get the right price action tomorrow and the trade starts to develop. But I'm pretty keen on this trade, so I'll be talking about it a lot, especially if it works. Alright guys, best of luck today. Keep your eye on it. Be careful if you're US dollar long. The market's not in that mood at the moment, so it's dangerous as well if you're short pound yen and euro yen. Those trades look more dangerous than most, with the stock market still pushing high.